Thanks for tuning in to India Market Close. I'm Neeraj Shah with Tamanna Inamdar, and the markets are looking.
Welcome Ajit, Mishra as well, who's joining us now on the show, SVP Research at Religare Broking. Ajit, great to have you on the show. Let's talk about where resistance levels are now coming in. What do you think is the next sort of obstacle that both indices will face?
Good afternoon, Tamanna. Good afternoon, Neeraj. So basically, as like Neeraj was also mentioning, that it's a normal beta that we are seeing in the market. So it's like almost 6 weeks of up move. So even the marathon runner also need a breather. So that is what we are seeing. That kind of surge that we had last week, where the market almost reached to a 21,000 mark, and now we are consolidating. But the best part is that so far we are not seeing any major price-wise correction. So it's more of like a time-wise correction that we are seeing in the market, and we feel that 20,800, 850 will continue to act as an immediate support area. In case if we slip below this, then this momentum may fade away, and then the consolidation, which is as of now is a time-wise, might turn into a price-wise consolidation correction also. So maintain positive tone until we break 20,800 mark decisively. And upside 21,200, 21,500 is what we are eyeing in the index. And the major area to focus on is still the underperformers like banking and IT. They were sitting on the sidelines for most part of this rally, and now we are seeing this pack also participating, especially the private banking majors and the IT heavyweights. So we feel that we still have room on further outperformance from both these indices, which could help the index to inch toward 21,200.
Okay. What about specific stocks for the day today?
So Neeraj, we feel that though we are seeing a bit of a consolidation, the overall tone and theme should remain the positive side is what we recommend. And we have a fresh breakout in two of these names. HDFC Life is a one candidate wherein we have seen a fresh consolidation breakout. So we are eyeing 725 levels with stop at 684. One can go long in HDFC Life. Other name is very long-term consolidation or a trend reversal that we are seeing is Z Limited. After spending nearly like 4-5 years under this corrective phase, we are finally seeing a reversal in Z, and 310 is the immediate target that we are eyeing. Positionally, one can wait for even 325, 350 levels also. So as an immediate stop, it should be at 280.
Okay, thanks a lot for that. Well, SpiceJet is in focus. They have approved equity shares and warrants worth 1,600 crores on a preference.
And in just a bit, let me go across to Mr. Mishra. If you have a view on SpiceJet on the charts, Mr. Mishra, and if anything in the aviation space, because aviation overall is definitely the talk right now, the buzz right now. There was a report this morning also on the aviation sector. GMR Airports is what we've been talking about, Indigo as well. But any views specifically on SpiceJet?
Almost 4 years of underperformance that we are seeing the stock has been struggling with. So in 2019, the stock made a record highs around 150 plus zone, and since then we have been seeing the stock has been gradually inching lower. This recent move from 22 to 60 definitely is an area where we had the last time major consolidation post the breakdown. So we feel that it's an opportunity for those who are got stuck at the higher levels, because the overall underperformance to negate this overall downtrend, we need sustainability above 75-80 zone. So which seems unlikely. Considering the overall texture in the long-term charts. So it's basically an ideal way wherein one can look for exiting from GMR, and any consolidation in Indigo or GMR Infra can be considered as a buying opportunity.
Yeah. And anything on SpiceJet specifically, or that's overall on the space?
So for the SpiceJet, as I mentioned that this recovery which we are seeing, though it may extend further also, that 65-70 could be the zone where it might head to. But upside still feel capped. So this is basically an opportunity, those who got stuck at the higher levels and to consider this rebound as an exiting opportunity.
I just want to come to Pankaj on another sector actually, which has been one of the top losers through the day, and that is realty. We've seen fair. What you like on the charts as far as real estate is concerned? Any kind of buying opportunity presenting itself today, or you wait for lower levels?
No, basically we have had very sharp run up in the realty space also. If you see that the index in fact have moved up from 540 to 740 in less than 2 months. So across the board, if you exclude a couple of the names which are now seeing buying interest, stock like Indiabulls Real Estate and all. But I feel that it's best to avoid laggards. In fact, any correction, the top performing names like Prestige, DLF, overall reality, Shobha, that should be the area where one should look at, once we see this correction getting over. So as of now, it's a void space for a short-term trading point of view, considering that we have yet to see the profit taking. But among the names, these are the top 4 names that one can look at.
Okay. But a bit more profit taking left before Ajit Mishra is comfortable with recommending an entry at that point. Now Nifty close to its day's lows right now. We're taking a very short break, but when we come back we give you an F&O check on the other side, because it's just been a phenomenal run over here. Any view? Obviously, it's going to be difficult to find an entry point here, but it crossed the 100 rupee mark as well. If you did end up owning the stock as in the primary market after the IPO, would you book profits now or wait?
So Tamanna, it's the agreement that we are seeing in the stock in the last 3 trading session from roughly around this level of 60 to 100 plus. So I feel that those who are chasing momentum, they should be very disciplined, and means they should be keep on trailing their stop losses. Is the momentum over? I don't think so, considering that the stock is still holding around the highs while the markets are down roughly around 0.5%. So one can continue to hold. It's just that you should be very strict with the stop losses. So as of now, I feel that this zone, we have very limited data to comment upon. Close to around 95, 96 is the area basically where we saw the stock taking a breather in today's intraday session. So that should be the area where one can maintain as a stop. And since now we have the circuit filter, one can carry the position for the next trading session as well.
Yep, you are with the circuit filter absolutely on a radar. When the rest of the market is sort of flailing, nothing seems to hit this stock. Pankaj, I know you don't...
And I want to take forward that piece with both Ajit and Pankaj. Ajit, to you first. Cement has looked exceptionally strong the last few days, and it's not Ultratech alone. We've seen some strength in Ambuja knocking on the doors of 500 and crossing that, SEC following suit, some mid-sized names doing okay as well. Anything that stands out on the charts for you?
Yes, so in fact, in the entire rally in the cement space, Neeraj, we've seen that Ultratech, Dalmia, Ramco, they were the one who was leading from the front. Now we are seeing catch-up move in the other names as well. So as you rightly mentioned, that ACC, Ambuja, and the smallest name, Sri Digvijay, India Cement, all these names are doing well. So Sri Digvijay, though it's a very small company to look at, but I feel that in case if somebody is having a short-term, a time horizon, let's say for a week or 10 days, it offers a very decent risk-reward ratio, because we have a fresh breakout in today's session. The stock is up roughly around 5.5%, almost 4 times, 5 times of the average volume. So that confirms the breakout as well. So with stop at 90, one can definitely look Sri Digvijay Cement. And India Cement also, I think that though we have seen a decent run-up in the recent week, but this consolidation which we are currently seeing, any dip towards 260 to 5 area, one can definitely look India Cement as an accumulation candidate as well.
Okay. Pankaj, do you have a favorite amongst the cement names, if you like the space in the first place, and why would you buy that stock? If
view, Ajit, your view on yes, J&K, and anything specific that you'd like to point out on your radar in the space?
So interesting thing that we've been observing today is that within the private banking majors, two of the names like Axis, ICICI, they are holding strong. They are making the days high. At the same time, SDFC, Kotak, Industrial Bank, they all are reeling in the pressure and trading at the days low. It's a kind of like a tussle that we are seeing, that the top performing names which started with the rally are still getting the traction and continuing with the up move. And any profit taking in the markets is like sufficient enough to just shake the laggers out. So as of now, I feel that if somebody is like playing out this overall reversal in the banking sector, private banking majors are the best teams to look at. Axis, ICICI, it is simplest name. But yes, in case we talk about stock like Yes Bank, which are coming out of the basis for last several years of consolidation, definitely we have an opportunity for Yes Bank to test 24.5 levels. Downside I feel seems capped now, considering that we have a decent base formation around 19 area. So the risk reward is also favorable as of now. So, but I feel that sticking with the top names is much safer. And for the J&K Bank also, that the phenomenal move in the last 1.5 years, the stock is almost reached its record high after almost 6-7 years of corrective phase. So there also I feel that's prudent to book profits and switch to the private banking majors.
Okay, by the way, PI industry should come up on your screen. The stock has taken a beating. Tamanna was just highlighting it and we were just talking about it. It's now 10% in fact. So Tamanna, it's even lower than what it was.
It's going to be a factor which plays out as a larger theme in a number of companies as well. Just a quick view from Ajit on PI on the charts. While we don't have any official source of why that stock is down 10% to close, any view there at all, Ajit?
So broadly, if we see that the stock has not done much in last 2 years, so though it didn't decline, but yes, the upside was also capped. So I think it's more of like a time-wise correction that we are seeing in the stock, and this decline that we are seeing today, it has engulfed the gains of last 4-5 weeks. So I feel that for a time being now, at least the tone looks down. So in case if we are sitting on profits in this stock, definitely you should book and wait for a dip around 3,200 to re-enter.
So 3,200 before you enter again. Please stay on with us, both Pankaj and Ajit. We just want to play out a slice of an interesting conversation we had this morning with Mishra of BofA Securities, who sees a 15%.
What's your top BTST, or well, today, who knows, an STBT might also be a possibility.
So Neeraj, I feel that in the market like this, wherein we're just seeing a day of pause or consolidation, so aligning the position with the overall trend seems a prudent strategy. So this kind of consolidation might continue, and we might in fact reach toward 20,700 levels. But these are the areas basically those who feel left out or they couldn't participate with the gap that we had last week. It's an opportunity for them to look for buying position in the top performing names. And again, like private banking majors and IT majors, these are the two areas where we still feel that we have potential of around 5-10% kind of up move. And Axis, ICICI, Infosys, TCS, these are the names which are still holding well. So any dip, any consolidation, further consolidation in the market is the area where one should look at.
It'll take time. Okay, some other gainers today, by the way, on a day which is losing out. Equitas is one more stock which has gained about 10%. So that's doing okay. KPI Green is up 10%, upper circuit, by the way. So that's done well too. And surprise, surprise, we're getting the management tomorrow, but HDFC Life is up 5.5%. That's a large name which is up 5% today. And if you pull up this week, last 7-day chart, you will see HDFC Life has actually had a remarkable move. There has been maybe 4 out of the last 7 days that it might have been in the green. So it's a strong uptick that we've seen there. Ajit, first, could you, okay, sorry, maybe I'm mistaken. Okay, it's had a couple of rough days too, but it's gone up for sure from the levels that it was at. Still, I stand corrected here, but Ajit, it's still higher for sure. Is it looking good for a trade?
So Neeraj, in fact, at the beginning of the show, we've shared two names, SVP Life and
was one of them. Okay.
Yeah,
so still hold by it because it's now up 5.5%. Can somebody initiate a fresh buy at these levels, Ajit?
Yes, so in fact, we have this clear-cut breakout of almost like 2 months of consolidation, and the kind of volumes, the kind of price action on the down day in the index indicate that this momentum may extend further. So for the time being now, we are eyeing 725 being the immediate target. So the stock has the potential to do much better.
Pankaj, you've talked about the interest in insurance companies as well, and they've been doing pretty well. Any view?